Hi everyone and welcome to our market analysis videos here at Zenfinex. My name is Connor Woods and I'm the Senior Market Analyst at the company, providing to you these daily videos on market commentary and also educational content. Now for today's video I'm going to be covering a Nasdaq 100 forecast for the remainder of 2021. And to do this I'm going to run through the fundamentals to see what themes are coming up which are likely to form the real bias for this market. Then I'm going to move on to the chart to analyse the key levels to watch out for. Okay, let's take a look at the themes for the rest of 2021. So if we just go back a couple of months in the early summer months, it seemed really as if we were on course for a real global economic rebound that hasn't really been seen before. However, there are questions now surrounding the pace and the effectiveness of the vaccinations. Are we going to need another dose, a third dose? And the threat of the new COVID variants, especially the Delta variant. So what does this really mean for markets? Well, it's these sort of things which are going to influence the Federal Reserve on whether they're going to taper their $120 billion a month stimulus package. Now the timeline given from the Federal Reserve is absolutely critical as it's going to show when the eventual interest rate hikes are going to be introduced. But what's this stimulus really done for the markets for really 2021 and last year? Well, in simple terms, the ridiculous amount of money that's been pumped into the economy has propped up stock markets. It's kept investors on a risk-on mood. And the chairman, Jerome Powell, tends to be dovish in nature. He has been throughout the year. People have said over the last couple of months, oh, he's going to announce tapering. He hasn't. He said we're still far away from our economic goals. Therefore, he's likely to remain very, very cautious about removing that stimulus, especially as we approach the winter months where COVID-19 is likely to spread more. And now it's absolutely critical that the world stays on top of vaccinations with minimal distribution issues, as it could be the difference between coming out of the pandemic fully or slipping back into it for a few months. Now for the Nasdaq, a cautious Federal Reserve is good for stocks because it's going to mean that money is not taken out of the economy, interest rates are likely to stay extremely low, and this makes stocks a lot more attractive. Now where do we stand with inflation? Well, inflation is the biggest single risk to stocks really for right now, especially throughout 2021. And a reopening economy has caused a surge in consumer demand, which has in turn caused an increase in prices, understandably. But the important point here is that as long as the Federal Reserve are correct by their repeated stance, which is inflation is transitory, then actually a growing and healthy economy can mean the Nasdaq still rises. But if they are incorrect about this and prices are actually rising at a lot quicker rate than anticipated, then this really is bad news for stocks. But let's take a look at the chart to see what we can aim for the remainder of 2021. Okay, so on the chart, and really this is a favourite of mine to analyse in terms of a technical level, mainly because it's been so simple over the last couple of years really. If we go all the way back to where the market opened in January, we opened at around, let's say, 12,700 and we're now up at 15,000, so it's a gain of around 2,300 points. If we go back from there, back towards January 2020, well then we opened up at something like 8,700 and that was just 2 years ago. So the real massive gains, and that's really highlighted by the massive amount of fiscal stimulus, because bearing in mind we've been in a global pandemic over the last couple of years and we're still growing this much. It says the nature of this market really. It really is a bull market which you Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Should be buying on dips. That's not going to change for me despite the situation around potentially inflation not being transitory. And straight away what we can see here is we can see a real key daily order block level which we're in as I'm recording this video. Now, the reason this is an order block level or demand zone depending on your style of trading, is you can see that we had this break of structure to the upside where we created quite a lot of pricing inefficiency, which has now been filled, break of structure, and then we topped out at the all-time highs, which are currently sitting at around 15,700. Now, you can see we've wicked out of that order block level. We tried to rally, on the 21st of September. It was shut down really from the 50-day moving average after we had that close below, and now we're looking to rally again. Will we see another leg lower in this market? If we are to see another leg lower, then we're going to see a situation where we smash right through this order block level, we potentially have a retest, and then we go down looking towards this 200-day moving average, which will be situated at around 14,000. Now, if you're a seller of this market, I think this would be the right time to get out of the market, and this would be a fantastic buy the dip opportunity. Are we going to see a recovery in the market like we saw here? Do you see where we had this drop in May? We had a couple of candles where we recovered and then we went another leg lower. Are we seeing something similar here? Or are we seeing something that looks a little bit more like when we dropped back in November 2020 and then just shot back up to the upside? Because remember, this drop here was formed by the issues they're having in China, the liquidity issues. If I just zoom into that, for me, bearing in mind the market opened up at around 12,700, I think good gains on the Nasdaq would see this market reach around 16,000 by the end of 2021. For me, that's the level where I think the Nasdaq will reach by the end of the year. I'm on the side where I think Jerome Powell's going to be quite cautious. I think the rebound in economic activity isn't going to be as strong as people think, and we're still going to need some sort of support in the market. But I'm just concerned that obviously we've had all this support in the market and it's great, stock markets are propped up, but we're going to have that inevitable hangover from that stimulus that's been put in. Then we could see a drop in the in stocks as well. So really what I'm seeing, just to summarise, overall up to 16,000 is where I'm seeing. Potentially we're going to get another leg lower in the next couple of weeks where we actually go and test maybe 14,000 at the 200-day moving average. I'm thinking we might test in a month or so, but the next couple of weeks maybe go and test the 100-day moving average at least. Now, what I've noticed as well is markets were overextended. Volume in the markets has been really low, liquidity's been really low, and that's always a recipe for markets to stock markets to prop up. Now we're getting a situation where the VIX, the volatility index, is actually starting to pick up some pace. There's a lot more volatility around the markets at the moment, which I'll be honest, I don't think will be great for equities at the moment. I think people might start to be a bit more risk off, and they might start hunting more fixed income, which is where we might see an increase in interest rates as well, which is why it's important to keep on top of things like the US 10-year yield, which looks like it's maybe starting to form a base. So some real themes to look out for 2021. Really important to see the Federal Reserve stance on tapering back their asset purchases. And also to keep an eye on inflation as well, which really goes hand in hand. Those themes really go hand in hand with each other. So that's it really for the Nasdaq for 2021. Aiming for 16,000. I think the floor of the market at around 14,000. Somewhere in between that range we can look for buying opportunities on any dips. It remains a buy the dip market despite the ongoing risks that we have. So make sure, guys, you've always liked and subscribed to our channel. It helps boost our channel, and we're pumping out these videos for you, which we're going to be moving up to 4 videos a week, which is what you guys have requested, which is great. Make sure you drop in any comments on the comments section, as we always reply to all the comments as well. And other than that, I hope everyone has a great trading week. And for anyone seeing this video in the next couple of months, I might give an update on where we are from there. Thanks very much, everyone. Take care.